Hey guys, I wanted to walk you through how to figure out some of the types of problems you might see in the first exercise. It starts you off with some pretty intense math, so um, hopefully this will help you understand how to do the calculations. So I'm going to give you a version of the numbers that Cengage gives you here. The numbers that you'll see will probably be different. But the scenario we have is that you're 27 years old, working in the marketing department of a medium-sized corporation. You're earning an annual salary of $60,000, which is paid every 2 weeks. Your employer provides a 401k plan and matches the employee contributions by 50% up to a maximum of 4% of your annual salary. And you are in the 25% marginal tax rate. So that's the setup. So what I like to do is keep track of my calculations in Excel. So I'm just going to do a couple initial calculations just to get us going. So our gross income is $60,000. That's paid bi-weekly, so every 2 weeks. And so to figure out what my gross pay per pay period would be, I just take that $60,000 and I'm going to divide that by 26. I know to calculate it by 26 because if I assume that there are 52 weeks in a year, I divide that by 2, that's going to give me 26. So there'll be 26 pay periods during the year. So I know my gross income is 60,000. This is before all my taxes and withdrawals and everything. And my biweekly gross pay would be 2308. So let's move on down to some of the actual math questions here. It says the maximum dollar amount your employer will contribute to your 401k this year is. Okay, so in order to do that, what I need to do is look up and see the rules that or the scenario we had earlier. So $60,000 a year, my employer will match up to 4% of my annual salary. So let's say in a hypothetical example here, let's say they're going to contribute the entire 4%. So I'm going to say, well, let's take that $60,000 gross annual and multiply it by 4%. I could also multiply by 0.04. It's the same calculation. So 2,400 would be the max they're going to contribute to my account in that year. And we see that as an answer choice, so it's probably the answer. Let's look on down. So we assume that I contribute 8% of my gross income to my 401k. How much will I contribute annually and per period to my retirement account? Well, so there's two things here. One is the amount that I'm actually going to contribute, and then later on down we'll count in what the employer's contribution to that is too. So let's just see what I'm doing first. So 8%. So I'm going to say, well, 8% of that 60,000. So I'm going to say 60,000, and I'm going to multiply that by 8%. And that'll give me 4,800. And then per pay period, that would be my gross income for that pay period, again multiplied by 8%. 4,800, and then 185 per pay period. I see those as answer choices, so there's a good chance that's correct. Next, we say, well, given my employer's contribution matching program, a total of X will be deposited into my retirement account each pay period. The actual tax savings for the employee from their portion will be X in income taxes per year. Okay, so first let's look at how much total will be deposited into my 401k. And to find that, I have to say, well, what did I contribute? And then add in what my employer contributed. So looking back at our rules up here, it says that the employer matches 50% of my contribution up to a max of 4%. So first let's see, I'm going to bring back that calculation over here where I say, well, what was the max the employer would contribute. I know that was 60,000 multiplied by the 4%. So 2,400 is the max they would do. Let's see what I think that's going to be right at the employer match. Let's see here. So I say employer is going to match 50% of whatever I contribute. So we're going to come right in at what that employee max match would be. If it turns out that the amount that I would have contributed there for the 50% was actually greater than what the employer max would be, I would just put in the employer max. So here, let's take the 50% of my pay period amount. Okay, so 92. So to find out my total contribution, I'm just going to add right across those. So total contribution would be what I'm contributing plus what the employer is contributing, and the same thing down here for the biweekly amount. The next part is to figure out my actual tax savings for the amount that I contributed. So even though I'm contributing $4,800 per year into my 401k, it's not going to reduce my net income by that much because it's pre-tax dollars. Those dollars aren't taxed. So, well, they're taxed, but only when I retire and start withdrawing that money. So, in order to figure out what that savings is going to be, I have to remember from the top I'm in the 25% marginal tax rate. So, I'm just going to say, well, consider the total amount that I put in annually, and let's multiply that by the 25% that I would have been taxed if I hadn't contributed that, and if it had just gone down to my net income. That would have been $1,200, about $1,200. I'm going to look in here. Well, they have one that's $1,203. Sometimes it might be off by $1 or $2. I'm not sure why. Then moving on to the next section, we make an assumption that I make contributions of 185 every pay period and it's going to give me an example of a number of years. I'm also assuming that my retirement account earns an average of 7% per year. I'm going to delete these numbers because they came from an earlier set. We return an average of 7%, and the company matches 50% of the employee contribution. Number one, that 185 number comes right at what we calculated earlier for how much I'm putting in. But now what we're going to do is just multiply out and see how much that money turns into over a long period of time. So I'm contributing 185 a month, and so let's see what happens in 260 pay periods. So I'm earning an average of 7%, so I'm going to look up 7% here in this column. And then I look down to 260 pay periods. That's going to give me a multiplier of 186, 80, 90. I'm going to put that here because I'm going to use that to multiply later. The second one's going to be 520. I'm just going to go ahead and look that up while I'm here. That's going to be 279, 66, 29. And then the last one, just while we're doing this, is going to be 325, 8162. So in order to figure out how much this money turns into, I just take the amount that I'm contributing, which is 185. And I'm going to multiply that by this multiplier to find out how much that turns into. And actually, I'm not going to do that. I'm going to, because the 185 is not all that goes in there. I forgot about the employer match here. So what's going to actually go in is 277 per pay period. And to figure out how much that turns into, I just multiply. So let's say 277 multiplied by this multiplier here. I'm just multiplying all the way down, so hopefully we get all the answers in one fell swoop there. Now let's start looking to make sure we have the right answers in place. One important thing about the multipliers is you have to make sure all the decimals are in there. Don't round those numbers out, because otherwise you can really throw off your numbers at the end. So I'm just making sure I have all my decimals in place here. Now let's see if we have the right answers. So 51,746, that one matches up. 77,467, yep. And then the last one should be 90,251. I see it there. So I'm not going to answer the other questions. You can look those up in the book, but let's see how we did on the calculations themselves. So first question looking pretty good, got that right. Second question, same thing, looking good so far. Yep, okay. So it looks like we did all the calculations correctly. So hopefully that gives you an idea about what to do for assignment number 1. And if you need help, always you can reach out to me and I'll do the best I can to help out. One thing that could throw your numbers off is just paying attention to that employer cap. That's what I'm highlighting there. But otherwise, it should be about the same. Thanks, everybody.